On this episode of the show, I have with me Karl Alomar. He is managing partner at M13, and we're going to be talking about an operator that actually is now in the VC space and how that actually affects founders, the type of offerings, the relationship, and we'll dive into some examples that Karl's going to have for us, that how there are differences between different styles of operators based on background, and we'll dive in a little bit about making sure you got the right founder fit and a few other things in there as well. Karl, thanks for taking the time.
Thank you. Pleasure to be with you here.
Absolutely. All right, before we dive in, M13, give us some context of who you guys invest in, type of VC you guys are.
We invest in kind of software-driven businesses, technology-driven businesses mainly, across the areas of the future of money, the future of health, the future of commerce, the future of productivity and workplace, including things like blockchain, and obviously technologies like AI are prevalent across all those categories. We'll generally invest either in a seed, but usually kind of a later seed, or a Series A. Those are kind of like our core investment time points. We kind of stick and support the company through the life of the company thereafter.
All right, absolutely. Okay, so we're getting to this episode. We're going to be talking about, obviously, slightly about the different types of VCs out there, and you're going to give us some of your perspective as well on how some of those differences affect the founder. I guess let's talk about M13. And we'll obviously have to touch on your background a little bit, but you consider yourself an operator. Obviously, you're in the VC space, and I'd like to kind of understand how your background affects the type of venture capital company you guys are.
Yeah, absolutely. It's actually kind of a whole story, kind of origin story of how we've ended up where we are today and what we do today and how we approach investing. I was a operator for 20 years. I was originally an engineer by education, but I started my first company in the 90s. I was able to exit that, built a fintech company in the 2000s, was able to exit that, and then most recently was chief operating officer of a company called DigitalOcean that ultimately went public on the New York Stock Exchange in the teens. So each decade I kind of had a different business, but each one of them scaled and grew to a certain degree. Obviously each one a little larger than the previous. So I've had a pretty good set of experiences of the full life cycle of what it takes to be an entrepreneur and a founder and an operator. And I've helped build companies literally I have this running joke that every company I started working with, each of those three, I started working in a closet and then worked my way out of the closet and eventually built a good sized company out of it. But in that process, obviously, have taken on a lot of venture capital money over the years, and have really over a 20-year period of operating just built kind of a pretty good understanding of at least how I feel or how I felt venture capital funds showed up, and they showed up in different ways. The one consistent though is I always felt that as a founder and as an operator, kind of get left wanting for kind of more support or more partnership or kind of more engagement from certain key investors. And I felt the structure of investment didn't really facilitate that. So when I joined M13 for Fund 2, the key goal was to build an environment that was incredibly founder friendly, but oriented towards that history and that ethos. And so we built a business, brought in a bunch of really, really top level executive operators that I'd worked with before, or other partners of mine had worked with before, and built this incredible team of experience that essentially had been through a lot of the kind of historical build and exit experiences that I'd been through. And that wealth of knowledge across different areas like finance or go-to-market or product or technology or brand or other just different aspects of business, when you put it all together, it becomes this kind of incredible backbench of experience that you want to share with your founders. And the one main thing to just coin how we think about our operation versus at least what I felt I'd experienced historically was that we really believe that to do it the right way, you have to be a proactive investor, not a reactive investor. And what I found historically is with a lot of investors, it tends to be a very reactive approach where you wait to see what happens with the business before you then react to try and help them in one way or the other. Some investors don't react at all. They're probably the ones I wouldn't recommend working with. And others will and will react and will sometimes be helpful. But because it's a reactive approach, it's often too little too late. It's often not the level of support that would be beneficial for the company. For us, we really focus on being proactive. As soon as we make an investment, we focus on identifying, hey, what is it? Let's align with the founder on what their strategy is to get from here to the next round of investment, from here to the future. And let's figure out how we can be helpful on that and figure out how we can potentially guide. And the last thing I'll say, just to kind of frame it, is even in my time at DigitalOcean, which was an incredibly successful company, we wasted so much time and so much money spinning our wheels on certain problems that could have been solved very, very quickly. We also potentially lost out on opportunities that could have been taken advantage of because we didn't have the right voices in our ears, kind of helping us navigate that proactively rather than just, dealing it with us reactively once we were probably on the other end of that issue. So this is just an example of trying to get ahead of that and really being effective. And we found that it's been incredibly valuable for our founders and helped us build a really great reputation in the market around that.
Absolutely. I love that. I guess if you were, well, actually, let's talk about it, because you mentioned obviously operator background. You want to build a VC capabilities to support founders with that side in mind. I guess contrast that with, and again, if we're talking, maybe the audience is a founder and maybe doesn't really know the difference, right? And I think a lot of times until prospective founders become founders, there's a learning process, especially if you're earlier stage career or you've never done it. There's a lot of things you just don't know. You're trying to learn as much as you can.
Yeah.
On the flip side, I mean, what are the other type of backgrounds that tend to lend themselves into the VC space?
Well, there's Lifetime, there's like career VCs who, and by the way, I think there are great VCs from every background. I'm not in any way trying to say that this is the only way and the rest of the highway. I like to believe that the way we're approaching it is better because that's the reason we're doing it, because in our perspective, it's better. But there are incredible VCs that I've shared board seats with, that I've had on my boards, that are fantastic investors, and I wouldn't degrade them at all. But I would say they do come from different backgrounds. So there is the operator style VC I believe they come from a slightly more empathetic perspective of what it takes to build and scale from stage to stage in the business. And then you have more of the finance background or kind of capital background VC that often can be much more metrics driven, much more oriented towards, sometimes those VCs are very good at the growth stage when you're kind of trying to think of going IPO and you have to be incredibly buttoned up. And then there's the career VCs who have built a certain amount of operating experience by just working with so many companies. It's not quite the same, I don't think, as being out there and doing it yourself. I sometimes recommend to some of our associates and senior associates, hey, go take a couple of years, do an MBA in the field, like go work with a startup, create a startup, do something where you're actually in the field and you're experiencing the other side of this coin, and then come back to investing with that additional experience. And I think that's a huge kind of mid-career MBA type opportunity for investors to take. But again, every individual has different intuition, has different skills, and you're going to find really, really amazing people with any one of those three backgrounds.
Absolutely. I think, and I guess you mentioned being founder friendly. You want to obviously provide those support functions, and founders have to take advantage of them, right? I think it's a two-way street. If a founder doesn't voice a concern or doesn't come to the VC with a question or an issue, there's no real way to provide that insight. I do think it's also interesting because every founder has to feel real comfortable to bring those issues to the table, because obviously if you think about it, you're like, well, these people have given me money to go solve these problems. If I go tell them I'm having these type of issues, how will they take that? And I guess every VC will look at that differently as a potential signal. Maybe not, maybe they won't. But I guess creating that safe space really is maybe what the question is making sure the founder feels comfortable to come back to you. And you mentioned in your own journey, it led to missed opportunity, it led to some delays and all that stuff. How do you create that environment to make sure that a founder can come back and the quote unquote no questions too stupid holds without any type of negative ramification?
That's such a great question because I think in my past, where you've had more of a reactive style board rather than a proactive board, you tend to hold back because you feel like, oh, I need to solve this problem before I bring it to the board. So I totally see that. I think the way we approach it is we try and get ahead of it. Instead of waiting for the founders to come to us, we try and establish a real partnership with them from day one. The way we do it is we have what we call a welcome meeting where we kind of sit down with them and figure out strategy, key drivers to the business that are going to get them from this stage of the business to the next stage of business. And we kind of get ahead of, hey, these are the things you're trying to get done. So we all are aligned and we have clear understanding of that. There are a number of VCs that are like, hey, I don't want to get into that level of detail. I trust, I give them money. I trust them to do the work. But with us, we want to be there. We want to be supportive. We don't want to get in the way, but we want to create an environment where they feel like, hey, we're fully aligned. We understand what they're trying to get done. And as a result, because we know what they're trying to get done, if something's not going in the right direction, we can see it pretty quickly. It's not like we have to wait for them to tell us. So we're asking the right questions. We're inquiring about the right parts of the business. We're building an ongoing relationship with our founders day to day that allows us to just be much more at the tip of the spear in terms of what the founders are doing in the business day to day. I also think that, a lot of it comes with the building of that relationship. There are challenges that founders face every day. If you're ahead of those challenges and you're giving the founder, good space and they feel like you're a good voice for them to lean on and you're able to provide helpful advice and support through just some of the minutia that they deal with day to day, very quickly that builds up into, actually really, I trust this person. I trust their voice and they understand the business. They understand what I'm trying to get done. They understand my strategy. The worst is when you're talking to a board member or an investor and they're just coming from completely left field with ideas that have nothing to do with reality. You're like, what? Why are you taking me down this journey? Like, I've got something to focus on in front of me. So just being really on point and really understanding the business gives them already that sense that you're someone they can talk to about the challenges as well as the opportunities. But it's absolutely a relationship building process. And again, being an operator investor, there is a certain level of empathy that I think operators have that founders gravitate to because they feel like they can tell me they're having a people problem because they know I've had people problems. When you go to a kind of a different type of investor, perhaps it's more challenging because you're like, wait, I'm talking to someone who's incredibly strong from a capital standpoint, but not necessarily an operator. I don't know that I can tell them that I'm having problems with my employee because they may judge me for that. So this is where perhaps some of that background and empathy helps as well.
Absolutely. I guess a question about most VCs you'll talk to, they'll say you're investing in the founder. That's the most important thing. You got to believe in the founder, and that's 100% understandable. I think it's a really when you're somebody who wants to be a founder and you're going to pitch and you're trying to get investment and you're trying to be that founder, you're trying to secure that investment. You've got a tough job because there's so many different, I guess, subjective things people are looking at, right? Evaluating what a founder has to go, that's the thing. I don't know if that's completely objective. I would love to hear if somebody has an objective framework. I'm sure there's frameworks, but they've got to be unique to each person and their backgrounds and all those type of things. When you're looking at a founder to invest in and you're thinking about the things that you already know, and we already just talked about one of them. Will they come back for feedback? Will they be proactive of asking us for solution? What are you looking for as an operator? What are you looking for? What kind of signals or tells are you like, hey, these are the things qualities that if I see, I'm more prone to going, this is the right type of person, because obviously you get pitched countless amount of ideas and you got to pick the right ones.
Yeah, I think the red flags are easier to highlight than the positives. As you said, the positives are very nuanced and they're very unique to the individual. The red flags are pretty easy: arrogance, hubris, lack of depth of knowledge of their category. Like, there's certain things that just tell you right away, this is not someone I necessarily want to work with. Even if they're going to be successful, I don't think I'll enjoy working with this person. And everyone says this is pretty clear. Like, you get into an investment with someone's a 5 to 10 year horizon. That's a marriage. That's not someone that you're going to just speak to once every quarter or something. It's actually, you're getting into a real relationship with them. So you want to work with people that you actually can get along with. But in terms of the types of, so let's get into a little bit of detail here, because I think creating some frameworks does give you a way to think about it. So there are two core types of talent out there. There's the athletes and the specialists, right? So the athletes are these talented people that are able to just do a wide, broad swath of things and do everything maybe 80% as good as a specialist could in any one particular area. And then specialists are very, very focused on a very key area or key category. So when you think about founder market fit, your specialist is going to have more founder market fit. So you may find someone that is just absolutely perfect to a particular category because they know that category better than anybody and they can execute and deliver in that category better than anybody. They can't do anything else. That's just the one thing they can do. Part of the issue with that, though, is then you have to deal with, well, if they're a technologist, are they just a specialist technologist? They don't know how to sell, they don't know how to give a vision, and they don't know how to do all the marketing, go-to-market stuff. Or if they're commercial, are they not technical enough? So there's issues you have to deal with on specialists. You have to navigate, like, do they have the right team around them? Are they able to actually manage the idea that they're limited, very good at what they do, but limited in that breadth? And then you have the athletes, and the athletes, you give them anything and they'll run through walls. They'll just get it done. They'll figure it out. They'll sell, they'll build product, they'll market, they'll sell, they'll deliver a vision. And they, to me, tend to be more impressive. Like when you put them in a room with a bunch of people, because they're just able to navigate a whole bunch of broad questions that may stretch them outside of their comfort zone. But again, and the same thing, there's always risks, and the downside of that is, hey, you're an athlete, but do you know enough about this category? Are you differentiated enough? Do you understand enough to be able to really be able to effectively compete in this category? Because we're in a world today where any good idea has 10 competitors. When I started, it was like, you have a good idea, you're going to be the only one. As long as you build it right, you're going to build something. Today, you build anything that comes from a kind of creative, intelligent place, and you're going to have 10 people trying to do a similar thing. So you have to be able to outperform them, out-execute them, deliver better product with them. So those are kind of the two types and the variances of how you think about those people to figure out, are they the right people? But what I will say is the things, when you first meet a founder, or when you're getting together with a founder, one of the biggest aspects of being a successful founder is your ability to deliver a vision. And it's not only because that allows you to potentially get investment, but it's also about how you recruit. It's about how you create culture and manage an organization and keep everybody motivated. Like, there's so much around delivering vision that allows you to be a really, really successful leader. And so that's probably, if you're going to come to me and say, if there was one thing that impresses you right out the gate when you meet a founder, that's generally consistent across the board, is, can that founder effectively deliver that vision? Can they effectively sell you on what they see the world to be, or what they see their role in that world to look like? And then from there, you then start carving out, well, are they a specialist in this particular area, or are they an athlete, and where are the limits of their skills, or where are the peaks of their skills, and how does that translate into like a big operating scaled business? There are some founders you meet, like, this is the perfect person to start this business, but when they get to 50 or 100 million in run rate, we're going to have to figure out new leadership. And there's other founders that you're like, this person is probably going to have a harder time competing in the early stages, but definitely has the skill set to scale this thing to a very big number. And so, there's a lot of variables that you're just playing with as you navigate those different characteristics.
Absolutely. I mean, that makes perfect sense. And I guess when you're looking, and you mentioned it's easier to look at the red flags, right? The things that you need to watch out for. As a founder, you obviously want to take your successes and see how you can emulate them, how you can recreate them as often as you can, because that's obviously a great recipe. Obviously, we're talking about founders. Every business is different. The dynamics are almost impossible to potentially map. And I guess when it comes to, you were just talking about the pattern matching aspects, but when you look at yourself and M13 and as investors, how careful do you need to be when you pattern match to realize that everything else that's happening is going to be so distinctly different from the other person, even if the ideas are similar industries, even if two founders came with two ideas that were the same and both were successful, a third maybe not. I mean, anyway, so I guess when it comes to being an investor and trying to make sure you're pattern matching the right things and not the wrong things, is there really like a true signal that you go pattern matching to avoid the negative doesn't give you still a false sense of security?
I think you have to come in with open eyes, knowing that you're not going to be right every time, and you're using your instincts. Like even when you're pattern matching, it's instinctive. It's not like I'm sitting down and filling out a chart and saying, "Oh yeah, check the boxes." If you do that, trust me, you'll fail more times than you succeed. It's the nuance and the instinct that tells you, "Hey, is this someone that I would buy something from? Is this someone that can carry a company? Is this someone that can?" It's very difficult to put that in a chart. So I think cutting out the negatives, I think just increases your probability of success. And just saying, well, I know this person's going to have a very hard time being successful because honestly, they can't manage, or they're not going to be able to recruit great people. So they're not going to have a great team, or they're going to have a hard time raising because they're just not good at telling a story, or they're so arrogant that it just would be impossible to work with them. We don't know that we would enjoy working together at all, or they don't listen to people, so they're going to not see their blind spots and they're going to be making mistakes. Like these are just kind of different little things that are the negatives. And so if you say, I see 3 or 4 reasons why this person is going to be difficult, it's going to be difficult for them to be successful, and you cut that out, then hopefully you're increasing your likelihood of success. And I will also say, you can pick the best founder on the planet, put them in a situation where the market just turns the wrong way for them, or timing is just bad, and their business doesn't succeed. And it just, you could still say, you know what, I love you so much, I'm going to invest in your next business. I know this one didn't work, it's not your fault. But and then in other cases, you can have founders that are average, but the market is just carrying them so quickly down the road that they just, create real value, and they're just not quite as talented as the other person who maybe just was in the wrong category at the wrong time. So there's just so many variables and outside variables that you can't control that I don't think you're ever going to get it right the whole time. The key thing is just to increase the probability. And if you can refine who you're excited about and who you want to work with and will have fun working with and feel like can collaborate with, then you're going to have a better experience making those investments. And realistically, I think you're going to increase the probability of success across that portfolio.
Absolutely. And I was going to ask you maybe final question for you. You mentioned obviously some of the notions of timing, luck. I mean, things are out of your control. You're a VC. You can only do what you can do. You literally do have to line up the chips, provide support, and watch them play out. When you think about that notion of luck, and you always hear about the VC stories, I was in this room and I did invest, or this is the thing I passed up. I mean, no one gets them all right all the time. How do you view that? How do you view when you're listening to pitch, evaluating obviously that point in time, and then potentially, do you go back and review what you did invest in? Try to understand things that you potentially might have missed, and try to do that post-mortem type?
We do post-mortems on companies that didn't succeed. We do post-mortems on companies that did exit effectively, and kind of try and understand the parameters of why. We also look at deals that we didn't do that turned out to be successful and say, well, why did we choose not to do it at the time? Like there's a lot of internal questioning and analysis that we do to try and figure it out, because you're never going to get it right every single time. You're never going to be, at the point of, tip of the spear every single time on every deal you do. But I think that ultimately it is our responsibility to understand where the currents are going and to have a thesis on how the future is going to evolve and develop, and to invest into that. And sometimes, whether it's, an administration change in government, or whether it's a financial crisis, or whether it's something happening halfway across the world that just affects a complete industry. Sometimes you just can't control those things because you're talking about investing over a 5 to 10 year horizon. So it's not like anybody can predict 10 years is a full economic cycle anywhere in the world. You're going to go through downturns, you're going to go through, upturns. But all we're trying to do is say, where is humanity moving and how can we invest into that wave, into that movement?
Absolutely. I love that. And I'm sure going through this episode we'll have maybe raised some additional questions, especially for founders out there listening. They might be open to getting some guidance going through the process. Is there a good way of maybe learning more, or maybe tapping you as a resource if someone is kind of stuck along their journey?
Yeah, absolutely. Obviously the easiest way to find me is LinkedIn. Just be Karl Alomar and finding me there in LinkedIn, and that's probably the easiest way to reach out and try and connect with me. There's a lot of noise in LinkedIn, so it's not always quite as responsive as you'd want it to be, but that's probably the easiest way to find me. Also, M13, you can go to our website, m13.co. You can reach out to anybody within the organization. You can reach out to me directly by email. And if you can present a good case and something that we get a lot of inbound. So we want to hear stories. We want to get emails that kind of make us think and, establish, some sense of interest, and we'll respond as often as we can possibly respond to the people that reach in. But those are probably the easiest ways to reach me. Let me know who you are and what you're trying to get out of a conversation. And I will, more often than not, try to make the effort to connect with people and talk to people in the community.
Fantastic, Karl. I appreciate that, and definitely thank you for your time.
Thank you so much.
Absolutely. All right, that's it for the episode. Be back again, different guest, different topic. Until then, two things. One, Karl, take us on a very good journey of understanding how an operator turned into a VC thinks, how they set up their service offering to be a little bit different than maybe another VC, and things to look for, and also his perspective on what he looks for and some of the pattern matching that he does. And we talked a little bit about timing, luck, and a few other things in there as well. So if you know someone that could benefit from this episode, please share it. I think it would be fantastic. Also, like, subscribe, comment, let me know how the show is going for you. Until next time, thank you and goodbye.